Initially, we were thinking that the Trump 2.0 would come in more drastically early part of next year, but apparently it's coming much earlier than expected. So we probably need to, markets probably trying to reprice to some extent. We've already priced in the fact that it will come in, but I think that the speed of it, which comes in probably by end of this year, will be coming a bit enhancements to those numbers as well. Yeah. So the announcement on Canada and Mexico is expected, but in terms of the surprise today, in terms of pricing in some of the Mexico and Canadian currencies. On China front, there's already about 20% effective tariffs against China now, so the additional 10% actually sort of expected, but we need to see how much the extension or the impact would be going into first half of 2025.
Interesting. Okay. But how are you advising clients to play this risk in the currency market? Because the currency market is the most sensitive to tariff threats, right? Yeah. So what's your advice? So
markets are already pricing in that since the election results came out. The extent is the last time Trump 1.0 happened, there were significant shifts. But I think this time around, we need to see how China reacts and to what extent would be the phased sort of impact on, phase increase on China tariffs would be going forward over the next 6 to 12 months. We also need to see what sort of Trump tariffs can do and whether there's going to be an extension of different products. As you know, I think different sections of the US trade regulations is already in existence. So that is sort of expected in terms of Section 301. But in terms of Section 201, whether it's going to be extension of other products beyond existing products that we already imposed tariffs, US already imposed tariffs on China.
I think the question is currency competitiveness. I don't want to call it weaponization of the currency or essentially, compulsive devaluation. But competitive devaluation. But do you think that is a strategy that countries would resort to?
It's a possibility, but as you know, I think one of the main focus in Trump's first term was how currencies actually react in terms of devalues their currency, and I think in terms of in the list, the currency list that the US already has. And I think that how do they respond actually needs to take into consideration. So I think this weaponization, the fragmentation and protectionism efforts would definitely be there. How China gets impacted, whether it's 10%, even up to 60%, will have impact on how some of the reallocation into neighboring countries in terms of supply chain will actually have some impact as well, and how those currencies will be impacted on the second round effects as well, and how US reacts to it. So we're in for a possibly interesting ride for the next. Obviously, it's going to be an interesting ride 6 to 12 months ahead, but in terms of how the market reacts will be much earlier.